Hello investors, thank you so much for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Builder's First Choice. This is a business that facilitates the production of houses, and it's well positioned because right now there's a lot of labor shortages. There's also somewhat supply chain challenges, and also the increasing prices of lumber are all helping here to drive revenues higher. I'm going to go through the impact of lumber prices. Going to talk about how in the past several months Builder's First Choice has really been quite aggressive in repurchasing its shares. I'm talking about how right now paying approximately 7 times forward sales is really quite compelling. So let's just dig right in, okay? So these are just two names, so Builder's First Choice and Blue Links Holding, two companies that are very well set up to enjoy the elevated demand in house price building, in house building. There is the backdrop here that there's a few moving pieces really. Lumber prices are the one thing that everyone's kind of a bit on edge about, because as lumber prices go up and until a certain point, for example, Builder's First Choice is able to offset that by increasing its own prices, and that obviously they have elevated costs as well, and to a certain extent that would impact its free cash flow potential. So higher lumber prices, higher revenues, higher costs, strong free cash flows up until a certain extent, because at some point you're not able to pass that on to your own customers. So there's a few different things here, and obviously the backdrop is that higher interest rates could also impact the demand that people have to buy a new home. Okay, so you're kind of like in a situation that home buyers want to get on the property ladder, but it might not be as affordable as many people felt. Okay, so we're gonna go through all this here. Now, you just need to keep in mind when you look at this revenue growth rate that they came out of Q4 21 with very strong top line growth, but they had some inorganic elements there. Also, the commodity prices going up that also impact here the overall drive and revenues. On an organic basis for the core business, not including any changes in the commodity prices, it was only up in Q4 12%, a little bit below that. But for all intents and purposes, this is a business that is expected to grow at approximately 10% on the top line for the core business over the next several years into in 2025. Obviously, there's a lot of moving parts and there's going to be a lot of noise coming out of here between now and then, but this is what you got to think about. This is kind of a slow growth business. That being said, as I already talked about in the introduction, if you have higher prices of lumber, up until a certain extent, this is quite favorable for the business because they're able to pass that on to their customers. So you get higher revenues, and because of the way that the operating margins come out, they're able to get stronger cash flows on the bottom line. This works reasonably well in a kind of slightly increasing lumber price environment, but lumber prices can also fall down quite quickly if the supply comes back online. Also, if there's spikes in lumber prices, that kind of breaks away all the model here, and it kind of puts people off. So you don't want that either. So it's not a clear investment. It's not the kind of thing that it's going to be very richly valued, this investment, at any point in time. There's a lot of moving parts. Anytime there's a lot of moving parts, a lot of uncertainty. Whenever there's a lot of uncertainty, investors don't pay a premium for that. So it's the type of investment that will never really trade at a very elevated premium either. So just a few things to kind of keep in mind. Okay. I already touched on this quite a few times, but essentially, when for home buyers right now, there's not that much choice available. Okay, so for them, they come into the market and they have to, more often than not, choose from what inventory is available. And given that there's low inventory from houses to pick from, this gives them a lot of incentive to build houses. Okay, so if you build houses, this is obviously favorable for a company that facilitates that, such as Builder's First Choice. Okay. Then you got the other side of the equation that I already talked about in the introduction. If you have interest rates rising coming up in 2022, if you have, let's say, 2 or 3 interest rate rises, that could dampen the enthusiasm for new properties to be built, because you might not be able to get rid of those properties, because you might not be able to get people to take mortgages at affordable rates. That being said, we're talking about 25 basis points to 50 basis points, 2 or 3 hikes throughout 2022. It's in the grand scheme of things, interest rates are still very much towards the low end of the scale. So I don't think that's going to meaningfully dampen enthusiasm right here. Also, as I already batted around a few times, there's the case of whether the price of lumber collapses again, as it did last year. That's obviously going to cause the revenue growth rates for Builders First Choice to come down as well. So there's a lot here that's happening, okay? That context aside, here's the thing, right? So you can see that the pro forma balance sheet is really, really strong, okay? The pro forma balance sheet has been meaningfully deleveraging over time. Now, you have to keep in mind that this figure here, where it ends at 2021 at 1x net debt to EBITDA, it does not include the asset-backed collateral. Including the asset-backed collateral, the leverage is at 1.7x, okay? It's very much in a manageable 1x to 2x net debt to EBITDA leverage. So you don't want to see it coming up too much, close to 2x, but at 1.7 it's really in that sweet spot that it's kind of slightly leveraged, and you are able to kind of take advantage of the interest rate being quite low and to be able to repurchase some of your shares. So I'll come to that in a minute. The other thing to talk about is that when Builders First Choice had their investor day in 2021, towards the back end, they were saying, okay, we are going to be kind of dropping our free cash flow in 2022 to 1.3 billion, but then it's going to steadily, very, very steadily improve. The outlook for our business is kind of reasonably strong. It's not going to be, a high growth business, but no one's paying that high growth multiple for the stock either. Then 2022 came around, and at the back of their Q4 results, they actually said, we're going to upwards revise our guidance so that we're going to come to approximately 1.6 billion to 2 billion of free cash flow. Now, at the midpoint, that's 1.8 billion. That's very much in line with what they came out with last year, 2021. So everyone was kind of expecting there to be a dip, and there might not actually be a dip. So the business is just like ticking along quite strongly. Now, the stock right now is priced at approximately 7 times this year's free cash flow, roughly 6.5, 6.7, let's say 7 times free cash flow. Perhaps it's not as cheap as Blue Link's holding, but it's not always the case that you want to go for the cheapest stock available. Sometimes cheap is cheap for a reason, and you're taking on unnecessary risks. And it could be the case that, for all intents and purposes, being aligned with Builders First Choice with a strong balance sheet could actually be a slightly better investment for investors. The other thing to keep in mind is that over the past 7 months, 3 times has Builders First Choice announced a 1 billion share repurchase program. And for context, during 2021, they repurchased, indeed, not just announced, they actually repurchased 1.7 billion of their stock. And they have announced a new share repurchase program now in February of 1 billion. This implies that between now and until it gets completed, they're going to repurchase approximately 8% of its market cap. Now, many companies announce share buybacks, and it's just an announcement, but never actually comes to fruition. But as it stands with this company, they've announced and they've actually executed, announced and executed. So I think that this is likely that this one was also been recently announced, will also be executed in the near term. Now, overall here, this is the takeaway, okay? There's a lot of moving parts here, okay? So you got interest rates, how that's going to impact investors' appetite for the stock. You got interest rate, how it's going to impact people's eagerness to take out a mortgage. You got the price of lumber, going all over the place. So in the near term, very, very near term, there's going to be a lot of oscillation in the share price. But over the medium term, I think that investors are right now not paying a heroic multiple for this stock. I believe that this is what Monish would call heads I win, tails I don't lose much scenario. So I think this is quite compelling. In any case, if you want to find out what kind of names I'm buying, don't forget to check out my marketplace. It's called Deep Value Returns. I highlight for you high quality, actionable investment insights. Thank you so much for listening, and I hope to see you next time. Bye bye.